Ah! Totally forgot this stupid light is broken. Now let's go. Cry me, cry me, cry me, cry me. Hey, good morning, everybody. G'day, mate. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Appreciate you. Thank you for being here. The overriding goal of these webinars is to help you become a successful foreign exchange trader. We can cover technical analysis, fundamental analysis, and trader psychology, and anything else you need because you're the boss. I am a humble currency trader. Just happen to be doing this since the very beginning of retail Forex trading. This week we got the Fed meeting. It's the biggest singularity in the price-time continuum that we have coming up, and it may change everything. It may change nothing. Many traders have already adjusted their portfolios in anticipation of a rate cut. Many are waiting for a rate cut. And a few are like, rate cut? Why would we need a rate cut at full employment and no inflation? I mean, why would we cut interest rates if we just raised them? But whatever, that's not what we're here for. So I am trying to help you to succeed. I hope you know that. I hope you feel that. And once you start to taste the sweetness of success, make sure you pay it back by visiting TradersWay.com, opening a live account, funding it with real money, and making them the prime broker for your successful Forex trading business. Oh, looks like my charts aren't up. Hey, what do you think of that? That I don't know if you recognize it. That's in just outside of Austin, Texas. I've actually hiked there. It's pretty cool because you walk through a desert and all of a sudden, boom, there's this true oasis. But you don't have to say anything. I already know. All right. Is that my backyard? No, it's not my backyard. So anyways, glad to have you here. Hope you had a wonderful weekend. You guys don't know, it's just outside of Austin, Texas. All of a sudden, there's like, it looks like a flying saucer took off out of the ground. And there's a waterfall, and all of a sudden, you go from blazing heat to suddenly you're in the shade, and there's a waterfall, and it's significantly cooler down there because of evaporation. It's a really nice place. Anyways, I digress. All right, let's get going. Yeah, how you doing, Marina? I hope that everything is okay. I was watching an old webinar from I don't know when, but anyways, you were in there, and I'm like, oh, I miss Marina. What's up, free parking? Yeah, Chuck. All right, so let's just go. Let's go. So one of the themes of last week, oops, I don't know my drawing tool. Where's my drawing tool? Cry me a river. Ride me a river. Yep, I figured as much, Marina. Well, don't be a stranger, huh? All right, one of the themes of last week on USD Swiss franc specifically was we had a double bottom at the exact price we would expect to see a double bottom, okay? And at the exact same time, Euro USD had a double top at exactly the price that we would expect a double top. And then we started discussing the counter trend. Okay, and on the euro dollar, I actually wrote counter trend question mark. Then I said watch both euro Swiss franc and euro dollar. Sorry, USD Swiss franc and euro USD, because you'll see if one moves, the other one's going to move. Okay, that's the assumption, but we don't know who's going to move first. Okay. Oh, right on, Marina. Okay, you see that? So one is going to move. We don't know which one, but the thing is, if you're trading it, because of the high correlation, you might as well trade them both as the same thing, just one will move before the other, right? So anyway, so we did get our double bottom, and it moved all right. Up, 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 up. Oops, I guess we can do it this way. Okay. Up, 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 down, down, buy, 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 so on and so forth. Okay. Now, looking at the regression study, you're like, Wayne, it's too early for regression studies. Okay. Once we're closer to the top zone, right? So my point is, once we're sort of in this neighborhood, a bear is going to start thinking down. Don't you think? So what would a bear be doing? Well, let's create a bearish plan now. Bears want to sell, well, this pivot isn't really the right pivot, but it is a pivot. So good enough, right? Then there's a 200 EMA. Then there's the top of the regression, and there's the weekly swing short. And I believe if I zoom out a bit, yeah, so let's add that. So let's do it again. You got roll reversal, monthly pivot, 200 EMA, top of the channel, M3. What does that mean in English? That means a bear has enough to start creating trade plans that look like this. Okay, but you have to be a bear. But you would have been a bear here, and you would have been a bear here, and it's just another trade to you, right? Down, 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 up, up, roll reversal, sell, down, 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 up, roll reversal. Went a little higher, it's okay. Down, 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 right? This is just a roll reversal. And of course, you're trading the top of the channel. Chuck's already in it, yeah, so that would have been a swing trade, right? Yeah. We talked about this on Friday in the swing trading group. And of course, people in the swing trading group are now learning that you can see these trades usually on a Thursday. Friday sometimes is too late. So imagine someone walking into work on Monday going, hey, I wonder what's going to go on. I wonder what's going on today. I wonder what I'll do. Can't wait to look at my charts and figure out what to do today. What you haven't figured out is you've already lost because someone else had the plan on Thursday, certainly by Friday. So if you're just showing up, you know, there's a saying in poker. When you walk into a poker game, you look around the room and try to figure out who the sucker is. And if you can't figure it out, you're the sucker. Right? So always be careful. All right. So let's look at the opposite and equal reaction. Okay? You guys remember this? In pink, which one's pink? In pink, I wrote counter trend. You guys remember that? I wrote it before non-farm payrolls was released, and I had a question mark. Probably 45 minutes before non-farm payrolls was released, we were way down, we were probably here. This is probably NFP right here, right? So on this X right here, we said, well, if it goes up here, this is where we would look for a counter trend. So now 2 weeks has passed. What do you think? There's a learning lesson. There's a lesson to be learned here, isn't there? The question is, if you can look at this and you see a lesson to be learned, what is it? What did you write down in your notes? Okay. The funny thing is, I also said that this would be the only place a bull could possibly buy. And there's the double top for the bears. There's the breakout pullback roll reversal. Here's a breakout pullback roll reversal. Now it's just gone. Okay. Yeah, that's called a swing trade. Big Perm FX. Forex Pipper says, true that. Yes, you did. So the being right isn't really that important. I mean, I would assume that most of the time, or a lot of the time, at the very least, that happens. So, like, it's not that big of a deal. But you should, I don't know, take a screenshot and try to remember this. Take notes, right? Because you're going to have to review this maybe to yourself in the future. Okay? All right, so now that is gone, and we're back to the beginning, pre-NFP. What if these bulls are still around? Because remember, someone bought here, okay? And then someone bought here and someone bought here. All of these are legit. So there's a reasonable chance they're going to buy again, right? So what is the price that we would have talked about on Sunday or even Friday? That price right there. And what we would look for at that price is this. Okay? Question is, do you have that? I don't know. That's for you to decide. Okay? Then if you're a bear, because you sold here and here and here, you're going to sell there. So that means if you're a bull and you've already bought the double bottom, or you plan on buying the next dip, at least consider this an area to take profit and just pocket those pips. And even if it goes higher, you're like, well, I took the easy pips. Because the nice thing about a trend is you can always get the next one, right? So, you know, you pick up 30 pips here, be happy with it. Okay? Why would you be happy with a lousy, stinking, no good, filthy 30 pips? Well, that's all that was available in this type of trade setup because we are not trending. If there's a bottom there and there's a top here, we're not trending, okay? I mean, the other thing I guess you could do is risk the 30 pips and go for here. All right, I'm good with that. And just consider it a swing. The most important part is you're thinking about it ahead. Malice aforethought. Yep. I'm bringing profits back. Yep. All right. W WTI. Okay, let's go. Let me do it this way. Let's change it up. Okay, this was a sell zone. 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 And this week's sell zone was here. You've already missed it. Too bad, so sad. Feel really, really, really bad about that. Where were you when the market opened? Oops. I'm Bing Brothers back. Yeah. Okay. The interesting thing about the oil market, because it's a commodity, it's not available 24/5. So it's not even available Sunday morning. So you could even sleep in and catch this one. But check that out. If you're a bear, you're not going to miss that. Now, here's the interesting thing. If you're a bull, it's setting up right here, right now. If you're a bull, you're going to play it off of this. So let me get my tool here. And this is not a very good place for this to reverse, but it did. Then you got the higher low, okay? And you got this as a maybe if you're a bull. The problem is it has to do with trending, okay? So to quantify the strength of the trend, I call it frequency. Now, I call it frequency, but then if you Google frequency technical analysis or frequency Forex trading or something like that, you're going to come up with something different because I'm self-taught, right? So I have to think of things as sort of, I don't know, I have to create my own lessons, if you will. So one of the things I think of is an oscillator when you're measuring sound waves, right? And once you get at a certain frequency, you have your peaks and valleys, peaks and valleys. If if these get narrower, the sound actually changes. Okay, that's a higher pitch. And if they get wider, you get a lower sound, right? So I'm using this sort of analogy, this frequency, to measure, to say like, have things changed? And so when applying that to price action, I measure like the top and bottom from here. We'll call that one oscillation from the top to the bottom. And then I look at that, which is the new bottom. It's this oscillator on a slope. You see what I mean? I take it and I go, and now as long as it's going up and down at the same frequency, it shouldn't matter where I aim it, right? So the problem is no higher high. So something's changed. And then we're not supposed to be doing 100% lower low because the trend was this way. Okay. And so this does not look very bullish at all. Okay. So I go back to my bearishness, if you will, and I see this, I see this, I see this, I'll probably see this, and then that. Okay. Okay. The frequency right off the bat tells me bulls are pretty weak. Even if it bounces here, too late. We should have been buying it here, and we should have been up here. Okay. Does that make sense? So I see the vulnerability here. Yeah, you're right, Chuck. And those things bother me. It's not, I mean, I look, well, how about, let's think of it this way. The markets are complex enough that it's almost impossible to calculate and adjust for every variable, known and unknown. Like, you just don't know when, like, oil tankers are going to be bombed and stuff like that. You know, all that kind of stuff. You don't know when a refinery shuts down unexpectedly or something like that. A natural disaster cuts off oil supplies, right? For example, even a hurricane going into the Gulf of Mexico cuts off the world from American oil and Mexican oil. And, we're talking about millions of barrels a day, and, that can hurt supply. So you have to calculate all these things, and a lot of the time we can do very good at it, and some of the time we can do very bad at it, just because of the change in variables, right? Variability is risk when you create models. So anyways, one of the best things we can do is trade when our models work. And it may be fool's gold or something, but it's something that you can at least believe in, even if it's an emotional belief. You can say, well, I think it's going to go up, and it's going to go up off of a monthly pivot. And sure enough, you see a reversal pattern right on the monthly pivot. So therefore, you buy it, and you feel fairly comfortable with it. Okay, great. So when I see something and I'm like, well, it's not perfect. It doesn't make it wrong. It just makes it not perfectly fitting into my model. And in those cases, especially if you're analyzing your trading not over hours or days, but decades, you can say, and this might be an old man point of view, the seasoned veteran point of view. You're like, I don't need this. It's not good enough. But a young man or a young woman might say, wow, I can scalp off this, and that shows vulnerability, and that, all that kind of stuff. Okay, cool. Okay, so you can treat it any way you want. I would say a double bottom hanging around Nowheresville is a weak double bottom. So if you were a bear here and you were a bear here, you still have every reason in the world that you're going to be a bear there. My concern is you're looking at your charts now trying to figure out what to do, and that tells me you don't know what you're doing. Right? This was so 8 hours ago. And it's just a follow-up here. So I can say, oh, that was so 1 week ago. But then that's just a follow-up of our monthly plan. Remember, this is a monthly front run. So if you didn't know what you were doing 8 hours ago, and you didn't know what you were doing 7 days ago, and you didn't know what you were doing 21 days ago, why would I expect you to know what to do tomorrow? Okay? Message received. Didn't mean to make it a bitch slap, but sometimes it's a wake-up call is necessary. We all need it. We all need it. We always all need it. Okay? All right. So here's another example of did not fit the model perfectly. If you're a bear, well, I guess if you're a bull, let's put it that way. If you're a bull, here's the monthly entry. Perfect. Here's the exit. You should have walked away rich right here. Walked away. Done. How'd you do on gold today? Nailed, or this month? I nailed it. What's going on today? I have no idea. I'm done. Okay, you could have been done in the first week. You might have looked for a counter trade, but it went a little too high, and then it went a little too high, and then it went a whole lot too high. But this is a sell pivot, so maybe you tried it. And then it did drop for a while, and you started to feel good, but then it went back. And at some point, you need to just stop. Okay? Okay? So I think when we were up here, I declared this a moo trade. And I said, you can do whatever you want, you just can't sell it. Tokyo! Ohio! So I believe my family and I have decided in 2021 we're going to fly to Japan for the Cherry Blossom Festival. I think that's it. I think that's what we decided to do, the whole clan. But we want to see the whole country, really. But that's what I want to do. So you can do whatever you want, but you can't sell. And the funny thing is, the sell is the best trade. But I guess I should care? Nah. The other trade is this one. Okay. So you got to drop into a small time frame now. By the way, thank you for subscribing, everybody. Appreciate that. Welcome to the family. Okay, so if you had to trade this, even though basically the trade is done from 2 weeks ago, this is leftovers. If you're going to do it, this is a right place. And now what you need to do is you move from strategy to tactics. So tactically, down, 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 up, up, sell, down, 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 right? Roll reversal. Sell, down, 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 roll reversal, right? These are guides. Up, up, sell, down, 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 down. Mark this, okay? And if it's going to go bearish, you're going to sell it pretty much now, or very soon, let's say. In the next hour, in the next 90 minutes, you'll probably be short. Okay, cool. But what I said before is you can do whatever you want, you just can't sell. Oh. So now what? So if you're a bull, then you have the right price. Remember, you need support. We got the support. Great. So now what? Now you need the price action. So ideally, you're going to see a double bottom, breach of this level, because that's the roll reversal. Probably get pretty close to this, ideally higher, but you can't really expect that. And then you'd be buying down here using the roll reversal as support, not resistance. Okay. And then a breach of this other area will also be very, very technically important. Okay. And you'd probably be long for weeks. You understand that? If you took that trade and you were long here, you would probably try to be long till the end of the year. Oh yeah, I just said that. Or you break out or break even, and who cares? Jumbo Terrace. Jumbo Terrence. Sure. All right. Kitty cat. I think this is a day trade. Definitely not a buy there. So why don't we mark this and then, oh, I'm going to lose it anyways. I was going to say change my template. Well, maybe I can change the indicator. Yeah, we're a long ways away from a buy. So if I made this my buy zone, we're ignoring the weekly plan, although the weekly plan would have been a decent front run. So you're going to have to make a decision here. So front runners would have bought it on Friday. So if you were a front runner, what you're hoping for now is, but that breaches the 21 on the hour. Hang on, let me change that to the 4 hour. Yeah, that'll make sense. Okay, so what'll happen here if you're a bull is you're expecting the retracement down to the 4 hour 5. So you're basically trading it out of position, OOP. Yeah, you know me. OOP. Yeah, you know me. So the trade plan is back to the 21 and gone. Okay. Now remember the 21's moving, so it's going to move up and to the left. And then the next one up to the left. So if you're buying it, you're probably going to buy it closer to that 8 than the actual 21, because if you, by the time you're up here, the 21 will move to there. Okay. The analogy I always use is you're out on the savannah trying to shoot a gazelle with a rifle. You're going to have to shoot in front of the running animal. Oh, you like Naughty by Nature? Right on. I mean, who doesn't, right? Yeah. I guess we'll, let's look at some euros. Look at some euro pairs. How about that Aussie, huh? Let's just zip over to the Aussie. Okay. Now, the interesting thing about the Aussie is Australia has told us that they are trying to devalue their currency. So this should be something you're on like daily. This is like your daily free money trade. Are you guys doing that? Your free money trade? Australia has quite a long history of giving you free money. I can think of 2 examples where the central bank comes out, in this particular case run by Governor Stevens, and he'd give you 1,000 pips for free. It's happened twice. Incredible. Forex Pipper says the Canadian economy is doing extremely well. The loonie has outperformed lately, so I'm a bear on the euro, on the USD CAD. Yeah, okay. I'm okay with you being bullish on loonie, but can you pick something different than the USD? I mean, so you're going to do well for sure when the market devalues the US dollar. But there's a lot of hesitation on that because of the uncertainty of what's coming up. So therefore, why don't you also consider like yen, Swiss franc, euro, and be open-minded, okay? Forex Pipper, all I'm saying is you should declare that you are a bull on the loonie and nothing else. Don't even mention dollar. Because I think sometimes the dollar will be great, and other times the dollar will be very bad to trade against. So I would create a scan like this. Okay. CAD versus dollar, CAD versus Swissy, CAD versus Kiwi, CAD versus yen. And be open-minded. Say, okay, I want to be a bull on a CAD. Okay, great. So therefore, your trade plan this week is this. Okay? You have to define whether you have support or not. So let's take a look. Yeah, seems like a reasonable place. If it goes lower than that, you're not really interested until you're down here. So you just take a walk. But yeah, you got enough to like set up trade plans now, right? And start taking shots. Okay, you got it then. Okay, great job. Can you check yen pairs lately? It's been strong, but commercial deficit is increasing. Oscar, come on. All right, there's economic data that gives you the general economic conditions that the central bank is dealing with. And then the central bank comes up with policies to deal with those conditions. And then on top of that, there's global macroeconomics. This is global macroeconomics. This is people getting out of risky trades before they go into summer. And the yen gets strong. Okay? So this is not commercial deficit increasing stuff. Okay. In fact, yen strength right now has nothing to do with Japan. Okay. That's the interesting part, right? That's why I'd like to maybe spend some time. I think it'd be cool after I graduate, maybe get like a Harvard fellowship and try to put together classic finance, behavioral finance, and some sort of new study of finance and create a unified theory of, let's say, the markets. Because everything you said is completely correct. That's not what happens. There's something else on top of that. Now, in general, Japanese economic conditions have created a central banking policy, which then creates an environment in which Japanese investors deploy their money in the most logical sense, right? Because basic finance, or classical finance, if you will, is based on a rational investor. So the economic conditions, or maybe even the demographic conditions, are creating the economic conditions, which are creating the central banking conditions. And therefore, Japanese investors try to be as rational as possible when investing their money, because money loses value over time, so you're going to have to invest your money to at least not lose value, but even ideally grow the value of your money over time, right? So we got all of that going on. But yen strength or weakness right now has nothing to do with that. But the general conditions of the last, let's say, 25 years have created a scenario in which if risk increases, Japanese yen gets strong. I can go into much greater detail than that, but this is not the time or the place. So there's some sort of market finance, not just economic finance or classical finance. But then there's also behavioral finance and all that kind of stuff that needs to be put in there. And then I think there's like a social, it's not behavioral per se, but I think there's a subset of behavioral of how humans are starting to work over the last 50 years. And especially now with social media and just media in general on your phone, and you're constantly surrounded by this media, that there's a new form of finance that needs to be flushed out and exposed. So maybe I'll do it next year. Who knows? All right. What are we doing? Oh yeah, so the CAD. So maybe CAD yen long, USD CAD short, sure. Although we're already done this. So here's actually a great lesson. I don't know if I said this or not in the past, but let's be very clear. This is the exact price a bear would sell. Okay, and you're supposed to take profit here and be done the rest of the entire month. So if you were a bear, you sold here on the first day of the month. By the end of the first week, you were done for the month, and you took the rest of June off. And you're, I don't know, you're floating down the Chattahoochee in an inner tube drinking beer and listening to bluesgrass. But you're certainly not trading. No, I don't believe that, Oscar. No. Yeah, that makes sense, Forex Pipper. That's just where we are here, just floating around. Floating around. Let's update this. Yeah, a lot has changed. Not. Okay. So if you were going to do another move down, the interesting part is, you can start planning next month and the month after. Okay. That means WTI has to go up. That means positive global macroeconomics, which would weaken the US dollar. And of course, this is USD CAD short. So that all makes sense. Okay. So let's put it together. Macro, global macro, okay, up, WTI up, CAD up, risk on, up, USD gets invested around the world, down. Therefore, this checks out. Breakout, pullback, breakout, pullback, breakout. Okay. The big caveat to this whole thing is that's a heck of a move in the middle of summer. And I'm not confident in that. Okay. All of this might happen in September, but not likely July. It could happen in July, but I'm dubious of that. Okay. Bridges to burn. Look at Swissy. That's bearish. That's bearish. So Swissy must be pretty strong. That's a hardcore sell, yo. That's a clear sell. You don't have to say anything. I already know. I heard it from them. You must have me confused with some other guy. Okay, so what? You want to be a bull? Okay. Okay, should have bought it 12 hours ago at this price. So now you're going to have to wait for that. But I hope you see, like, if you guys are doing your job, there's tons of easy trades. And if you're not doing your job, you're frustrating yourself. Okay? Let's see. That one may be out of position. Let me check. Okay, yeah, that's an S1, right? Okay, that one's out of position. Tradable, but not ideal. So I'll walk away from Beast. But you can see I have a trade plan, right? Okay, cool. So I'm just not bullish on that. Can't even find a reason to be bullish. Okay, here's the next one. Perfect entry 12 hours ago. So that's two that gave you perfect entries if you happen to be a bull over the last 12 to 16 hours. We'll take a look at this one and perfect entry again. Okay. So what I'm saying is if you're doing your job and you say you're a bull on this, you have at least 3 perfect entries 12 to 16 hours ago. Okay. And if you're just kind of getting into it now, you're not doing your job. Okay. just not doing your job. Maybe you'll get them. Maybe you'll still get but the thing is, you're a bull in a downtrend. Okay. So you need to manage your risk very well, which means you're assuming things like double bottoms before higher highs and all that kind of stuff. So the closer you get in the support, the smaller your stop actually needs to be. And therefore, even though your entry is aggressive, your risk management is conservative. And if it reverses, it reverses and you get paid, but you're not even really expecting it. So all you can really do is enter in a fantastic trade at exactly the right price. And then plan B of that is to trade the actual reversal at or near that price and start building a position, right? But you have to understand, because it's not an uptrend, it's not likely to happen. That's all. You just have to say, well, I need to build it, but it's not likely to happen. Or another way of doing it is you can say, oh, I think it'll go up. And this is the exact price it's going to go up. But I'm not trading this until it is going up. And you might say, I'm a bull, and this is the price, but I expect to see a double bottom, then up to the 21, and then down to here, and then up to the 55, and then down to here, and then there's going to be a bigger move, and then maybe a macro move, and then up here. And you might not be long until, it might take you 2 weeks to get long. But at the end of the year, no one cares. People just look at your trading at the month, and if it says plus 4% for June, that's all people care about. They'll look at it and say, oh my God, you went 2 weeks without trading. What was wrong there? Did you go on holidays? Like, no, it was trending down at the moment, so I was setting up a long, but the risk was too high. So I waited for it to reverse before I started getting in. And they're like, oh, well, that sounds really smart. Like, yeah, I know. I just can't gamble with your money. And I hope you appreciate that. And they'll say, you know what? I like you. You're a great trader. I think we underpay you. Actually, that never happens. They always bitch and complain. I made 4%. Why didn't you make 5%? I made 5%. Why not 8%? La 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 la. So I'm hoping to receive my dorm assignments today. How nice is that? Nothing like being 46 and living in a dorm. Oh, yeah, it was fun. We had some rain and there were some puddles on the track, so that made that very exciting and stuff. But like anytime you go racing, you're like, that was great, but all it did was whet my appetite. Like it wasn't enough. Like I could have used more time. I don't know if racing's ever satisfying because you didn't quite get the time you wanted. You didn't get the amount of, you weren't on the track as much as you wanted. You didn't go as fast as you wanted. You could have done a little bit better, and you just want back out. Forex Pipper says it's the best time. It's very difficult. It's very hot. So we did that one. This one was so beautiful. Oh, there it is. This is the actual chart I did it during non-farm payrolls. Check that out. Counter trend? Maybe. Cool. Marisa, log in where? Oh, is that right? Yeah. I suppose that makes sense. Yeah, wake up in the morning, walk on the path along the Charles. I'm in the library or in the classroom almost the entire time. Anyways, look at the long for this week. Bulls are doing their job. That's great. Good job, Bulls. Now, if you're a bear, you got to prepare to do your job. And that means probably in the next hour or two, you're going to be short somewhere in here. Okay. So you should already know that. This is, right? So obvious. Oh my gosh, right? So now you have to then start preparing. What kind of trade plan are you going to have here? What will you do if it behaves in some sort of fashion like this, or, at that price, or another one at this price? Okay. How do you plan on trading it? And then do you expect it to like head up, head down, head up again, and then down? If so, how are you going to play it? Because it could also go up, down, up, down, up, down, up, down. So how are you going to play it? So you got to have like, you got to keep your eyes on the prize, you know, here and here, and there's going to be some price action. Is it going to go up, down, and like this, or is it going to go up, down, up, down, up, or some variation of the two? Yeah, probably one of those. Which one? I don't know. But if it happens, it's going to happen in this area or in that area. So I know price. I know the price where this will likely happen, but I don't know the time. Okay? But since we're near price, the timing is probably soon. Okay? So you could go even on a 5-minute chart and start planning it. Okay? We're already seeing vulnerability as we get close to that price, so that makes me feel good. Okay? I start to feel real good. Okay? I would expect to see something to that effect. Or plan B, or not plan B, but a scenario I also see in this case is like this, right? And then you get this and then that. Either way, your stop should take care of all of that. Forex Pipper, are you in the United States now or somewhere else in the world? Oh, way too much free parking. Lower your leverage, okay? That's ridiculous. If the stock market did 4% in a day, people would be freaking out. This is too much. Too much leverage. I'm telling you, it's just too much. Well, see, being down 1% in a day is also bad, right? Just shows that you're over leveraged. Egypt, huh? Yeah. I was supposed to advise some guy in Egypt on starting his fund and sit on his board and stuff, and he had a college professor that was going to go in with him and who knew lots of rich people. The guy just never followed through, but he wasted a lot of my time. He just never followed through. So there's a lot of money that would like to get out of Egypt, it seems. Sure, free parking. I have to say it, right? Otherwise, I'd be a bad mentor. But at the end of the day, you're going to do what you want to do. I think the problem, free parking, and maybe you'll listen to this a little bit. At the end of this week, certainly in the next 14 days, we are going to lose a lot of volume and volatility out of the market. Volume means the market will be slower, but also because less people are trading, your technical analysis is going to be less reliable. So that's a big risk right there. And then volatility just means, I guess they both kind of end up being the same thing. Trading is going to be slow, and I don't even mean by daily basis. I mean even by minute basis. It'll actually take hours to make 30 pips instead of minutes. And there's less likely to be a trend. There's less likely to be a follow through. There's less likely to be a breakout. Okay. So if your entries are a little bit less than perfect, you may be entering closer to where you're buying, where other people's are preparing to sell because there's no follow through. Okay. And then lastly, whatever, your levels of support and resistance are going to be less reliable because there are less people trading. And so even though it's obvious technically, if no one's trading it, very often they don't hold the line. So my worry is when you're over leveraged over the summer, you're going to lose 3 or 4 or 5% in a day like you're making now, or even worse over the course of a month. And then you'll look back at the market, which is the beta, and the beta was 0, and yet you lost 10% of your account. When nothing happened, you would have been better off on vacation. That's all I'm saying. So be very careful. If you're over leveraged, but you're trading in a trend, yeah, okay, you're going to make a lot of money. Yeah, it may not be the wise thing on the long run, but on the short run, look, any idiot could buy a dip in an uptrend, right? And the trend sort of hides the cracks. It's sort of like the painter hides all the mistakes that the rest of the construction crew made, right? The trend sort of hides all the little cracks and stuff. But when we are likely not to have the trend, when we're likely to have low volume, and when we're likely to have low volatility between, I always say, the middle of June till the middle of August. So we have about 8 weeks here where you're facing this risk. When you're over leveraged, nothing will happen except you'll lose a big chunk of money. And also remember, right, and I'm telling this to you, but I'm also telling myself. Think of the math here. If you lose 50% of your account, and I'm not suggesting you will, but let's just play with the math here. If you lose a 50% of your account, you need to make a 100% return to get back to break even. Now, if you were bad enough of a trader to lose 50%, there's no way in hell you're going to be conservative and disciplined and make a 100% return. It's just not, it's impossible. So when you feel like it's going to be a difficult time to make money, I mean, based on flows, like in this case, seasonality, when you just know it's going to be much more difficult to make money coming up. You need to be more conservative. And I can tell right away, the very first thing you need to do, lower your leverage. So if you normally do one lot size, do one or two minis. Okay? Yeah. And just keep your powder dry. Think of it that way. You got all year to trade. Keep your powder dry until September, and then let's go ape shit on the leverage if you want. I'm not recommending it, but if I had to like keep you alive, that would be what I would do. Okay? Right on, Forex Pipper. That's really cool. Well, see, Forex Pipper brings up an interesting point when it comes to Egypt and just, right? The way that capitalism works, and it works particularly well globally. The problem is governments get in the way and screw everything up. But the way that capitalism works is it looks sort of at the weaker links, and they're not weaker links like bad. It's more like, where is the next development project going to be? Where's the need for capital? So if you've already invested your capital, made factories, built all your buildings and all that kind of stuff, you've made the growth. But to do more, there's a diminishing return. One factory is fantastic. Two factories, okay, that helps. Three factories, you probably don't need. And by that time, your, let's say, profit per dollar invested is practically zero. So there's only so much development you need. And then to create newer opportunities, there's a lot of different slopes that you need to change if you're looking at these different models. I forget some of the names of the models, but there are things like you can change the education of your workforce and all that kind of stuff, and that changes slopes. And you could add a little bit more investment, right? But then what that shows you, though, is that area or economy or whatnot is fully invested, and you're basically at optimum. And when you're at optimum, your economic profit is zero. Now, you might make financial profit, but your economic profit is zero, which means you have no better opportunity to deploy your capital. It's perfectly deployed. If you had a better opportunity, you would seek that, move over to that new market. So you're at zero economic profit when you add in financial profit minus opportunity cost, and you get zero. But then capitalism says, okay, that economy is fully developed. So let's say China is fully developed. There's a lot of money that's gone into China in the last 25 years. And then you say, okay, that's fully developed. If I put money in there, my return on investment is going to be quite low because it's already developed. And to build one more factory, to build one more skyscraper, whatever, it makes almost no impact, right? But then you go to an economy that doesn't have any factories or doesn't have any skyscrapers. One new factory has a huge impact, and the return on investment is ginormous. That's called the catch-up effect. So suddenly you're like, I don't want to invest in China anymore because the return is so low because it's now mature, but India looks really good, right? Or Egypt looks really good, and off you go. There are other risks associated with it, but if you build, the return on your capital is going to be significantly higher. You might be making 30% return on capital in Egypt and make almost nothing in the United States. So at some point you say, well, the cost of doing business in the United States, or let's say the return on my capital in the United States is so low, even though it's safe, there's not much economic value I can add to this economy, but I can take on additional risks and let's say build something in Egypt and get rewarded for that. And money moves towards these things. depending the interest rates can attract, like in my book I call it a money magnet, but opportunity can be just another rate, because whether you're investing into building a skyscraper or a factory or in one place, or buying bonds in another place, all you're doing is you're creating and investing into a cash flow. For every $1,000 in, do I get $1 back or do I get $100 back? You know what I mean? And those things change. And then what risks do I have to take on to create all that? So Egypt's in this fantastic place right now where global macroeconomics have improved, geopolitical risks have fallen. And we had talked about this in the past. The United States is expensive. The stock market's at all-time highs. The real estate market's been up 5 to 10% a year for 10 years now. Things are expensive. Houses I looked at in 2008 have doubled. Okay? So where does the money get deployed to in the near future? People would love to invest into Europe, except it's gone socialist. No one wants to invest into socialist countries because their track record of success is zero. Too bad. People love Europe. Okay? So you're like, well, might as well go to Egypt. Let's build a skyscraper in Cairo. Things are getting better. Yeah, right on. Is that you're in real estate or what? MT2 wants binary options. MT2, why binary? Binary is fun for scalping, but you're never going to have like a business model worth investing into. Thank you, Steph. Thank you for subscribing. What time is it? I guess it's been time. Right on, Forex Paper. Hey, if I'm ever in Cairo, I'll give you a call. We'll have some tea. Stocks, real estate, and science. Oh, yeah, MT2. And the reason I mean it, like I've taught people how to trade binaries and stuff, and it's interesting. And the interface got pretty good. But here's the thing. You put in $100, maybe you make 80, right? Or maybe you lose 100. Okay, so you lose more, or you lose more than you can possibly win. Well, right off the bat, the risk-reward ratio is not favorable. Okay? But let's say you get it right. What's the most you could possibly win? Well, like I said, 80% of what you risked. Like, well, that sucks. Because if I'm really right, I know that the secret to success is letting your winners run. You understand what I'm saying, MT2? We know, like, that's the model, right? Keep your winners small, let your winners run. Well, right off the bat, your losers are bigger than your winners. But when your winners are right, you can't let them run because you have a maximum profit. No matter how right you are, you're only going to make 80 cents on the dollar. So you can never possibly let your winners run. You're guaranteed to have losers bigger than your winners, which means you're going to need to be right about 80 or 90% of the time. But because you're locked into being income focused, you can never generate wealth, because the way to generate wealth is let the winners run and make 1,000 pips, make 2,000 pips on a trade. But on top of that, earn interest. So the third part is, even if you were right, and you were in your trade a long time, but in binaries you're not, well, in Forex, you would earn income. You would earn interest payments. And I'm earning over 1,000% a year on some of my Forex trades, just in interest. 1,000% a year. And you get zero. So all of a sudden you're like, oh, well, that doesn't sound very good. I'm guaranteed to have losers bigger than my winners. I cannot let my winners run. which I know is the number one key to success, and I don't get interest payments, well, heck, I might as well just trade Forex and use a stop loss. Right? See what I mean? Okay, great. So MT2, you either listen to what I just said. It's logical. I have no problems with binaries. So we're not talking you out of binaries per se. I'm just giving you the facts. So if you can learn how to trade with a stop loss, you can let your winners run so that your losers are not bigger than your winners. Because we know that. Like, we know these two things. I think it's a universal truth. Your losers must be smaller than your winners. I think that's a universal truth the vast majority of people would agree with, like 99%. Your losers must be smaller than their winners. And then the next thing, you must let your winners run. So if you can't do that in binaries, be careful. Now, I showed people, like if you go on YouTube, and I believe that it's in my Trader's Way videos, I show you how to use binary options to hedge your cash position. Has anyone watched that one? Has anyone watched that one? How to use binary options to hedge your cash position? That's what a hedge fund manager would do. Okay? You should Google it. And it's under Trader's Way. So you can definitely do it. It's absolutely fine. And listen to this, binary options might actually be a great thing to do over the course of the summer. But you're not going to be able to build a career on it because it makes no logical sense. If you put it together in a business plan, so you give me a business plan with a mission statement, operational direction statement, right? KRAs, KPIs, and then you give me a cash flow. And I look at it and I'd say, this doesn't make any sense. I couldn't possibly invest into you. That's all. Like literally plan it out and you'll say, you should see, right, that it doesn't actually make sense as a business model. But it's something you can incorporate into your business model. It's a great way to scalp. Okay? It's a fantastic way to scalp. And it's a great way to hedge. Okay? So I'm not poo-pooing on binary options, but if you're trying to become a successful professional Forex trader, in of itself, it's dumb. You're not using it properly. It's designed to do something specific, but it's been marketed to you completely different. So what I see is usually it's marketed in poor countries where people want to turn their $10 into a yellow Lamborghini and, I don't know, chicks in bikinis and all that kind of stuff, models and bottles, right? And it's a fool's game. If you think I'm going to turn this into a business, because businesses make money, right? Amateurs gamble, businesses make money. So you need money. Okay, then plan it out like a business. Show me a business plan that makes sense, but I've already done it and I can tell you it doesn't make any logical sense. No one would invest into you if all you did was binary options, because there's limited upside and your downside is larger than your opportunity. Like no one's going to give you $1 million to go out and make 100,000. It just doesn't make any sense, right? So if you plan it differently and say, well, I trade spot Forex and binaries, and I use them in conjunction with each other. So short-term plays I take on a binary because I have a guaranteed downside risk, right? It's a limited downside risk built in, so I can take the shot and I know my risk-reward ratio, but I can also use it to hedge my long-term cash positions, which I'm I'm in to earn the interest. So you can say, well, I'm making 1,000% a year on my Euro Turkish lira, and I'm making 800% a year on my Euro South African rand. And I will do whatever it takes to not get knocked out of those trades. So therefore, in times when ZAR is weak and Euro is strong, or in times when Euro or lira is weak and Euro is strong, then I use binary options to hedge those positions on the short term and not face overwhelming hedging costs like you would in a traditional hedging scenario. And then people would say, oh my God, you're a genius. Woo! I want to invest into you, right? So, anyways, is that the one? Oh, nice. Yeah, that looks like it. So anyways, peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Make sure you give that video a like and this new video a like.